Well, greetings everyone, and again thank you so much for the invite here. It is my first time in Chile, although I feel like we have known each other for many decades between New Zealand and Chile, following each other closely with economic policy and our climate and our markets, so it's wonderful to be finally here. It's a lot darker than I assumed, but hopefully I can get above ground at some point. Thank you also, colleagues. I'm left with not too much to say after a long day. The Reserve Bank of New Zealand, we headed off into this world of inflation targeting very early, and we had a long history of very high and variable inflation, a small closed economy bouncing around alone in the South Pacific, and we eventually committed to inflation targeting. And that commitment that we made in the late 1980s, early 1990s, has succeeded primarily through communication. So I don't think you can ever underestimate the importance and the value of being able to communicate, commit to your purpose and follow through on what you were doing, what you said you were going to do. We've spent a lot of time since with everyone in this audience, many wise people, debating around the different levels of nuance around that communication. But a lot of that is very secondary levels of importance. We can get better, we will get better, everyone is trying that. So we've now come through, a long period of low and stable inflation, and we went out to our stakeholders, like many central banks do, and asked all sorts of different questions. In particular, do you trust us? Asked them in lots of different ways. They said yes, but then they also told us that we don't know what you do or how you do it. So that probably wasn't the best basis for trust. And this is only as recent as 18 months ago. So here's a central bank that has been inflation targeting, has been known for being transparent, doing all of the things that the textbook says, and yet the vast majority of people really didn't know what we do. That came as probably not a surprise to those who were outside of the bank looking in, which at that point I was, but certainly as a big surprise to a lot of central bankers in there. Why a surprise? Well, I think being independent as a central bank can also too often lead you to be isolated as a central bank. There's nothing worse than a customer getting in the way of a good internal meeting, and we're very good at having lots of internal meetings around what we should do, but were we communicating sufficiently outside? The answer would be no. Another challenge, and what I said to our economics team when I arrived in this role, it's my third time back at the central bank, is that low inflation is now just taken as given. You don't get Global Peace Prize awards for achieving low inflation anymore. In fact, it's like being in charge of the electricity. You're only famous if the electricity stops. And so don't expect people to be cheering you down the streets with excitement because you've got low and stable inflation. Your challenge is to keep explaining to people the underlying purpose. Low inflation is a means to an end, it's not an end in itself, and I think that was strongly forgotten at our central bank, and I think it's poorly explained globally. I mean, we are after long-term sustainable economies, we're after productive economies, we're after inclusive economies. So those are the important outcomes, and low and stable inflation is just one necessary but far from sufficient component to it. So that's pushed us hard. We had the isolated part. We like to talk in our own language with each other. We like to come to very complex conferences and put lots of good math on the board, but we didn't like to have to explain too broadly why inflation was a means to an end. We've just assumed too often that people understand it. I think another challenge to us is that society's expectations have evolved considerably since inflation targeting started, which again is putting pressure on all of the central banks, finally, to probably be more broad in their communication and broad in their thinking. So we've heard from the Bank of England and the different efforts they're doing, but it's interesting that there's no original thought out there. It seems to be that all central banks are looking for ways of improving, maintaining, increasing their relevance and their social licence to operate. With that, our role as a central bank, certainly in New Zealand, has evolved. We've been seen as one of, a credible institution in a small open economy. One challenge with that is you end up being given more and more jobs with the same resource, and quite often more and more of those jobs make you appear less infallible than low and stable inflation is. So the Reserve Bank of New Zealand, like some of our colleagues, is a full-service central bank. We distribute the money, we keep the money as a means of exchange, store of value through low inflation, but we also bank the banks, and we are the prudential regulator of the banks, and those types of activities, and insurance companies and non-bank deposit takers. So these tasks keep growing, and it means that your evolution of communication has to improve, just for the strictly ballroom low inflation, but also about how you're doing everything else on board. And one of the biggest challenges that came to us was not just prudential regulation, but the macro-prudential tools that are coming with it. So at one point you may be lowering interest rates at the same time that you're increasing the loan-to-value ratio going on in an economy. And if you can't explain how all of those different instruments fit together on your dashboard, how they're calibrated and do that in a credible way, then it's just noise and failure is what the public can hear. So again, it's communication. Where are we at on our communication? Well, we are rapidly evolving, both through our legislation. We have shifted from being a single focus 1 to 3% per annum consumer price inflation. We also now have an additional, I suppose it's more normal, we've been more normalised, where we are also having to explain how we are contributing to maximum sustainable employment, and how we are setting our monetary policy without unnecessary volatility in the interest rates, exchange rates and output generally. So that is quite a lot to explain, even though it's what we all believe we've been doing in any case. But the level of explanation or dependency has increased on us only over the last couple of years. We've also shifted to a committee structure. We now have 4 internal members from the bank, myself being one, and 3 external members. So going to a more traditional committee member with this dual mandate of inflation and employment. And again, a lot of explanation about how you're achieving your work at the same time as retaining your operational independence certainly has put a lot of pressure on us. What have we done about that? The answer is not a lot different, but we've done the same better. And when I say not a lot different, the Reserve Bank of New Zealand has always produced an economic projection when we put out our interest rate positions. We have an endogenous interest rate path in that. That is well understood, that it is us displaying a reaction function. It's also us trying to convey the uncertainty and risks that sit around that reaction function, and we've evolved more to storytelling around the types of risks and uncertainties in that endogenous interest rate path. I think the best use that forward-looking projection and endogenous interest rate path has come for us recently it has allowed us to talk about any potential trade-offs between the inflation and the employment challenge, which isn't that often, but more importantly about the variability of interest rates, exchange rates and outputs through a very wide path of potential interest rate policies we could follow. So again, the forward-looking path we are very comfortable with. The public, we know, have got very used to the conditionality of that, and in fact we end up in a position where we see the market adjust pretty well consistent with how we would have based on the economic news or shocks or surprises to our assumptions as we've gone through. A challenge sits in there, of course, which Alan Blinder talked about a long time ago, which is don't be trapped by the markets. We just start looking at a mirror. We're watching the markets, they're watching us, we're just watching each other. And so we still have to make sure that there's the independent thought and courage in there where we're setting our policy. One advantage going to a committee, apart from being able to share the problems across 6 people, which I found hugely advantageous, the other advantage is we can produce a record of the meeting. So on the day of monetary policy statements, the public are fortunate enough to get a projection. They get some cartoons for those who can't read to up to what's level 21, was it, Stephen, in the index. They also get record of the minutes, and we have our stand-up and conversation with it. I'll finish just with a little bit about the broader social licence. Our legislation is still in Parliament for the second leg. We've finished the monetary policy that's going to the dual mandate and the committee, but the legislation is in Parliament looking at everything else we do, our governance arrangements, our financing arrangements, our breadth of prudential regulatory behaviour in the economy, and of course our management, our failure management, dealing with large systemic banks. So it is a very complex process and something that our own people in the bank didn't understand, let alone trying to explain to society and asking society for their views on the legislation. So one simple task that we did was we created a story. In fact, we didn't create a story, we borrowed a story from our own Indigenous New Zealanders, the Māori Polynesian population, and that story is one of a tree god, Tane Mahuta, who grew and separated Papa and Rangi, that's the mother and the father, the earth and the sky, separated the two to let the sunshine into the economy. And we talk about our central bank as Tane Mahuta, that tree that has allowed the sunlight to come into the garden of Tane Mahuta, New Zealand's financial system. And that has allowed us to appeal to a very wide audience who would have never understood what the central bank was about, never saw the true relevance, and it has provided a very rich storytelling. Here we go, and that's Tane Mahuta, or at least a pictorial, and it's separating Rangi and Papatuanuku, and it allows the sunshine to come in. The roots of that tree is our legislation, and I've talked about that changing. The sap that goes through the tree is the money we produce. The trunk it goes through is our payments and settlement system, all of the core infrastructure we need. The big branches are the banks that are grafted onto New Zealand's financial system. Some are so large we can't afford to let them fall because they will destroy the broader garden. And it's that narrative that is helping us explain and really get a wide part of the New Zealand public, particularly those who weren't interested at all or who felt left out, to be included in that story. So that's our activities, and I will leave it there.